All right, guys. So my name's Tony. A lot of you would have spoken to me a lot before. Just seeing who's in the lobby at the moment. Look, in terms of if you can hear me, just reply back to hear and see the charts. That's the most important thing. Just a little check there from what you guys can see. We'll wait a little bit as well for some of the stragglers to get in. Should see in the chat box on the right hand side. You should be able to see just a little reply there would be great. If one of you guys could reply, that'd be fantastic. Just got to find out where to. It's a chat, so it's where you can ask questions to me. Basically, you should see a little comment in there. Can you see and hear me, and see chart? Don't really want to launch into it if a couple of you can't. It should be fine though. All right. Yeah, we've got a few of you today. This is a much better time to do these updates as well, because a lot of you are working during the day, and to get access when you have your computer is important, right? So you can sort of visualize what we're talking about when we're talking about certain pairs and how the market moves, and what the relationships are. It is nice to have it actually in front of you, and to talk about the potential levels that you should be watching coming up. I'm going to assume that a few of you can hear me, because no one said they can't, but a confirmation would be fantastic in the chat. We're about to get going, guys. That's it. Oh, good. Actually, it's comes through as questions, not as... All right, fantastic. Beautiful. All right, so there's a few pairs that I focus on, and if you've been my clients for a while, you'll know that Aussie-Kiwi is one that we traded a lot in 2015, 2016, because it has a fairly reliable sort of pattern. And in the current market, what's happening is that the trade wars and just generally a lack of follow through in the new New Zealand government's sort of pledge to change the mandate of the RBNZ, which is Central Bank of New Zealand, has led to this brief period. Well, it could be brief, but potentially a brief period of New Zealand outperformance compared to the Australian dollar. And this is pushing us down to year lows, back towards the middle of 2017 lows, which is this 105 level. Now, 105 is sort of well known inside the Aussie-Kiwi as a big level that the market can bounce off. And the market definitely has bounced off this a few times in the past. It did have a little adventure all the way down towards 1.01. Never's been below parity since both these currencies have floated. Never's been below parity, and rarely has been above 130. when the Aussie-Kiwi went above 130. Um, this was when the Aussie itself was near 110. Yeah, so the Aussie had a huge little adventure up towards 110, broke above parity for the first time against the US, and this was the maximum strength we've ever seen in the Australian dollar. And this is when we were the lucky country, and China was booming, and everyone else was in the doldrums after the financial crisis, and we were still having high interest rates. So this level is unlikely to be seen again. This level is also unlikely to be seen again, but this little sort of range trading that we've seen in the past 4 or 5 years has been a good source of money maker if you've got a medium-term view on a currency. So the reason that we're talking about this is that we're getting back towards this key level. So 105 is a level that a lot of traders sort of, if you've traded Aussie-Kiwi, just know, oh, wow, it's back at 105. Let's have a look at the market and see if it starts to base. And if it starts to base, this is a monthly chart, so it takes a couple of months to base this one sometimes. We can be looking to buy under 105, and then target 108 to 110 in a very high probability fashion. Now, in terms of it going lower, yeah, if there's a full-blown trade war and China gets into the doldrums, then I suppose you might get the first time we've ever tested parity. But the way that the trade war is playing out, it seems to be much more of a mechanism to start negotiations between Trump and China, more than they really want a full-blown trade war. Now, you can tell that Trump focuses on the Dow Jones and on the stock market's performance, mainly because he always tweets when it does well. I mean, he was tweeting just the other day, on Monday, actually, so Tuesday morning our time. I'll show you what he's come back with. The thing about Trump is that, if he's going to do something damaging to the stock market, that's going to definitely play into his effect if the market starts blaming him. All right. Now he must know that the market was getting skittish. Yeah, and on last week especially, you saw pretty aggressive selling coming through, enough to cause concern anyway in the financial markets. Like I was looking at the market on Saturday morning, going, wow, perhaps we have now entered a bit of a downtrend, a bit of bear market for the first time, and this trade war is going to get out of control. But come Monday, there's lots of comments from both China and Treasury Secretary Mnuchin, basically saying we are settled down, we're going to talk, and there's some back channels, we're going to make a deal. Yeah, so what we posted on Tuesday was great news. Dow posts third best 1 day gain ever. Now, this is the day after a huge fall, right? So Friday was a huge fall, which was one of the biggest downside ever. But the fact he's focused on this, and he used to always post every time I made a new high, he was always coming out claiming credit. It would weigh on him if he starts to see a bear market and the market basically blaming the trade war if it was to begin. So I think it's going to be a temperate sort of trade war, and I think it's if a negative reaction happens too quickly, they'll walk it back. And this is the same thing we've seen with the NAFTA negotiations. They've kicked on and on and on, but nothing really too serious in terms of walking away from it. He's just threatening to walk away from it, threatening to hit China with these big tariffs, probably going to be walked back as well. Now, remember, he's done the steel tariffs, and then he's basically excluded 90% of the big countries in that. Okay, so that's led now to a little bit more of a view of, well, maybe the buck's bigger than a bite, and that led to that bounce on. That led to the bounce in the stock market on Monday. Now we come back the next day though, and the market's back down. So this is a bit of a problem for those of us who watch sort of risk on, risk off sentiment. So when the market goes up, risk is on, and that has an impact on which pairs we're going to play. There was for a moment there, we were looking at both dollar yen and Aussie yen, euro yen, pound yen, all super excited on Monday, starting this big rally, and then a day later, now we've got a new problem to put out. So another fire started, and this is sort of a little bit more what happens when you do have a more negative stock market. This was very hard to happen last year. Yeah, when the market was in a full-on rally mode, just blew off the top. Uh, 22,000, 23,000 was the target, ended up at 26,000. Then you had that huge crash as all the volatility products unwound on the same day, and the market then stabilized. And then we're going down again, and it's almost like the market's looking for negative reasons. Yeah, what should have been a very easy rally this week, as trade tensions have settled down, has turned in 24 hours to a new downside. And this is not even on trade war. This is on tech stocks, and the tech stocks in America have been on another of their own little bubble. So if you're looking at here, you're looking at this daily, sorry, and you're saying, wow, that was a huge rally. Yeah, what's the tech stocks done, since this? Yeah, you bring up the US tech. This is on the Easymarkets MT4, by the way, and if you want to trade with a little bit more precision, I suppose, in regards to trading, because when you do enter a trade on the market, you will get your trade appearing. All right, so this is, in some regards, what you're looking at here is it's visualizing your trading, and you really, if you're not into MT4, you should have a think about doing it, especially if you're going to be doing this a little bit more seriously. And the good thing about MT4, it's been around for 10 years, and there's hundreds of different add-ons, hundreds of different chart templates that you can use, and a very large dedicated community to it. But what I like about it is I can just put a stop loss, put a take profit, and visualize my trade. But what I'm looking at here is that the daily here had a rally on the Dow Jones back up towards 25. Well, nearly got to 26, but say 25.5. And the US techs, NASDAQ, actually made a fresh high only a couple of weeks ago. And so this bubble, which they've been talking about in US tech, led by most of the FANGs, which are these big, the big four. You're looking at now Facebook, Amazon, Google, and I don't want to say the wrong one, Netflix. But what you're seeing here is this unraveling on the basis of this fresh scandal coming through from Facebook, right, has led to the rest of the market being caught in a downtrend. But the fact it's happening and happening so easily is a characteristic of a bear market. And it's been a while since we've seen that. But basically, the market goes looking for negative news and it finds it. Yeah, and you've got to be a bit more wary now that when we're looking at fresh lows and pairs, so dollar yen, say, is at a multi-year low. You'll be looking at this and saying, oh, it's pretty cheap. Can it go lower? All right? Can it go much lower? And, that's, well, yeah, its relationship to the stock market is pretty strong. And its relationship with the yen as a safe haven means that if you have a long-term view that this is going back up, for whatever reason, US raising rates, Japan never raising rates, your view has to be first centered upon what the stock markets are likely to do in the next couple of months. Now, May is coming up, and there's an old saying in the trading world, sell in May and go away. So you can't really rely on May to help you out. Now, April, if it's anything like March, we're in for problems. And unless I see a change in the behavior of the market very shortly in terms of the ability for negative news now to drag the market down, or the market coming out and reacting more to negative news and not having that resilient, sustained bounce, right? That bounce that comes after every fall, bounce that comes after every fall, bounce that comes after every fall. If this starts to roll over, and the characteristic of selling rallies becomes the way to make money, yeah, and everyone's selling rallies just because that's how we make money, and the lows getting lower, then you're going to have this almost change of behavior on a macro level that's going to be very hard to stop. And you don't need a reason for the market to keep rallying in an uptrend. You don't need a reason for the market to keep falling in a downtrend either. So the ability for this to turn into a systemic situation in the stocks where they have a big correction, and when you think about how much room we have to move, I mean, this is when Trump got into power that week, right? So for it to pull back to 20,000 is nothing. If Dow pulls back to 20,000 though, while it's not going to really affect the grand scheme of things in the rally, right? still going to be in a nice little uptrend, and everything's going to be fantastic. Just be a great opportunity to get into the market if you haven't been in for a while. Change your super fund from bonds to stocks. The effect on the dollar yen, all right, it's unlikely that dollar yen's going to become immune to stock markets. The effect on dollar yen is we're going to see it at 100 or lower, back towards some of the bad days. And for those who've never traded dollar yen too much, we spent a lot of time under 100. Yeah, and it was quite comfortable under 100. Yeah, so the fact that, okay, 105 looks like a nice level. I'm going to buy here without a stop loss. Is an account killing idea. Yeah, you really want to be careful when you get involved in these trades, when you get to these fresh levels, right? Now, that is a stark difference to the trade we're talking about here earlier, Aussie-Kiwi. It is much harder to see a sustained move below 105 coming for the Aussie-Kiwi, and will rely on a huge alignment of things to happen. Basically, a full change between what is basically New Zealand being a sister state almost of Australia in terms of the cost of things, the way we do business, our laws, everything is very similar. The state of our economy, where we are in the business cycle, very, very similar. So this trade is a trade you can definitely start to add positions to, average into. This trade, if you're getting into trouble, you need stop losses. You need stops at 103, 104. If you're buying at 105, just for the value play alone of it. And it really, this is more where you need to be traditional about your trading, and you need to follow the trend and be looking to keep selling rallies because it's likely to keep going lower. Yeah, and that's just the way it is. And I'm a US dollar bull. Yeah, so I'm a dollar yen bull anyway. So I think that over time we do have a lot of opportunity to go higher. It's just right now I'm extremely cautious on it because I'm not sure how this stock market's about to evolve here. And I can see ways in which we evolve very negatively. The rally in the Nasdaq is so big; it's much bigger than the rally in the Dow Jones, and so the potential for it to have a correction, a big pullback, and drag down the rest of the market with it, just in that negative sentiment, is extremely real. All right, so Aussie-Kiwi won't be as affected by that by much, but the dollar yen would be. Now, the question that most traders ask is, well, in the current market, should we be selling the US dollar? Yeah, well, US dollar has for a long time had a relationship with the stock market that what would be the case is if stocks fell, if you were to tell me stocks about to fall 3,000 points over the next 3 months, and there's going to be a bear market, a sharp selling in the Dow Jones, and Nasdaq led, a little bit of correction in tech stocks as some of them get revalued, and the government clamped down on regulations, sort of like what happened with Bitcoin, but now in the privacy sector of tech stocks, then I would say, yeah, US dollar is going to be quite strong across the board. Yeah, and I would say that, probably back towards 93 if this was back in the day. Right now, recently, the US dollar has lost a lot of its safe haven status. It still has a safe haven status against the Australian dollar, right? Don't get me wrong. You don't buy Australian dollar generally when stocks are falling. But in terms of can you reliably sell the euro and the pound when stocks are falling? No, you can't. In fact, the euro has almost taken over the mantle as one of the go-to places when there's risk off in the market at the moment to be buying instead of US dollars, especially if it's a US dollar, if it's a US based story, okay, if it's US stocks, if it's US trade war. The euro is almost the ideal place to put your money with its low QE still and low interest rates and very strong economy, and it's not part of the trade war. So China and US, if China and US started a trade war, then it's going to be dragging all of Asia into it, yeah, and Australia is definitely going to get hit. In a downturn as well, just a general bear market in the stock market, the euro has been performing much more like an alternate currency to the US, almost a rival to the US dollar in the past year or so. So you can no longer sell euro dollar when stocks fall. In fact, you can start to look to buy it when stocks fall. And the only really big selling coming through in the euro is via the euro yen when this is happening. Yeah, so the euro yen, just since the stocks hit their highs in January, has fallen around 600 pips, and it has room to fall back towards 125 as well if there was a bit of a bigger bear market. But each time the dollar yen falls, the euro seems to be holding its own as well. And the longer term outlook for the euro is definitely positive, given that the central bank is slowly, very slowly, getting out of QE, and then the market is starting to price in rate hikes in 2019. So that's, a big thing about the market is that the time horizon for big moves is generally 12 months to 24 months away. As we get closer to the RBA raising rates, then it's going to start to be a big reason why the Aussie dollar goes higher. At the moment, though, there's no concrete view that we're anywhere near there, right? With the euro, it is. The debate is not on about, like it's already been talked about from ECB members and leaked by ECB insiders. The debate on the euro is not about if they're going to end QE in November, October. It's about what is the timing of the first rate hike. And the reason stated by the Netherlands ECB member that they haven't said they've confirmed they're ending QE yet is that they're worried about the euro rallying and that having a negative impact on their currency, on their economy. So they're very, very cognizant about the euro's effects. A stronger euro slows down your economy, makes your exports more expensive. And there's a good debate to be made that the US actually wants a weaker US dollar and is letting this weakness in the US dollar continue. You saw Treasury Secretary Mnuchin not that long ago say, basically cast doubt on the strong US dollar policy. Yeah, now, if it becomes a little bit easier, if the US doesn't defend the US dollar, especially if the dollar breaks this 88 level on the US dollar index, and is taken by the market as a placid endorsement of this, because a weaker US dollar is going to make the exports get stronger, and I'm sure Trump has been told about this, right? I'm sure he understands this. Then it's not like you can expect the Treasury Secretary or the National Economic Advisors to come out and say, we want a strong US dollar. There's no reason for the US dollar to be weak. Our fundamentals suggest we should be stronger. No one does that anymore, right? You haven't heard that since back in the day when Obama was in play, and he was openly supporting a strong US dollar, saying a strong US dollar means our economy is good. And then, what they wanted also a strong US dollar is that as a reserve currency, they're allowed to get away with a lot. And one of those things is that countries will keep buying their debt, and they're running a huge deficit, right? So this is an important part of them to have a strong dollar, just so the value of those investments from other currencies doesn't get lower and lower. But they don't seem to be phased about it at the moment. In fact, I think they're looking forward to they're almost working behind the scenes to hurt the US dollar. All right, they want that weak US dollar to help out their economy. Whether that actually is going to help their economy, we'll find out. But you can't rely on intervention or jawboning from anyone in the US government anymore, right, to help this. So if the market wants to break down, and by no means is it certain that we are going to break down here, you can't rely on the stock market going down to help the US dollar anymore against the euro, and definitely not against the yen, and potentially not against the pound as well. Right, so those are the big ones, and they're the ones which make up the bulk of the flow in US dollar. And if they're not going down, if the US dollar is not getting against any of those, then dollar index is probably going lower. The Aussie dollar and Kiwi dollar and Canadian dollar, which are commodity currencies and have a relationship with global growth story, which will get hit in any trade war or get hit in any downturn in the stock market, that those currencies can go down against everything at the same time. So Euro Aussie, we'll get to these trades soon. Pound Aussie starts going higher, and the Aussie dollar starts going lower, but the dollar index stays under pressure, if not breaking down. So what would it take for the dollar index to break 88? Most important is the euro, and we'd have to break the 125 weekly. Would have to break this 125.50 level. And then we've got sunshine up to around about 130. Okay, so 130 is a target that most banks and most traders sort of have in the back of their mind as very achievable by the end of the year. And especially as we get closer to ECB and that becomes a thing. ECB announcing the end of QE, and then everyone speculates on the first rate hike because the economy is strong enough for them to be raising rates today. Okay, they just don't want to rock the boat right now, and it's hard for them to get out of their little extended QE experiment. Same as the US went to QE1, QE2, QE3. There's a lot of the market addicted to the juice in Europe, so they're going to be very careful how they end it. But it's coming, and it's very hard to for them to deny how strong their economy is. All right. So keeping that in the back of your mind, that's the market setup right now. There's a chance here that stocks toe into a downtrend, and that could be pretty brutal. A couple of months coming up, and how that will affect the market is dollar yen down, Aussie dollar down, and Aussie yen down double speed. So Aussie yen, if you haven't looked at that chart lately, was it getting up to 90? Tested 90, tapped 90. I was there that day at tapped 90. I was like, where are we going? I thought maybe we're on the next leg up into that new zone, 80 to 90, so 90 to 100. But we got rejected, and now we're sharply lower. And now 80 is a big level coming up. If we break 80, a lot more traders are going to be looking at the low 70s. And that would make sense in the next couple of months for us to get there if stocks went down another 10%. Okay, we're not talking about the end of the world here. We're just talking about a healthy correction in tech stocks, maybe a bit of trade war fears playing out, and then we'll be technically and also just psychologically ready for another big rally probably, because the global economy on many settings is quite strong right now. Right, there's not too much of a huge issue that can't be solved. There's small issues that are giving us a reason, an excuse to pull back. Facebook is a small issue. Regulation of the tech industry, I suppose, is a bigger issue, but it's still going to be fixed, and then market can look at the fundamentals, and it's quite strong. Trade wars, yeah, it's a huge issue, but it's probably going to be sorted out. They're not going to have an extended trade war, probably, and that will just lead to a small problem that we can then go from a lower base to have the next leg up, while the global economy is so strong. Now, how that ends is many years from now, 2 or 3 years from now, when all the central banks have raised rates too much and the economy stalls, and then if the economy is weak and then stocks are falling, that's a different story. Yeah, we're not talking about a small correction, then we're talking about big sell-off. But that seems to be a 2020 problem, not a 2018 problem. So you should view these corrections and these short-term moves as not the start of Armageddon, not start of something huge, but just the start of potentially just a bigger pullback in stock markets anyway. And when it ends is when we turn around. Yeah, when we stop favoring this new direction that we're in now. So these trends are pretty strong. You don't want to be like the dollar yen. You don't want to be too brave in trying to pick the bottom here. Aussie yen, like there's going to be a lot of sniffing around at the 80 level, but you don't want to be too brave at these levels because the market can rip through these levels. If you're looking at the Aussie dollar itself, we spent a lot of time between 77 and 75 in the last couple of years. So that's 77.50 level, and 75 is where the market's very comfortable. Okay, extremely comfortable. We could spend months in there, but this particular time, we tested 75 in December, actually, not that long ago. But this particular time, if we test it down here and the stocks are on the way down, it's going to be a little bit more dangerous. Yeah, especially if the trade war stuff is not sorted out. So be very careful if you're looking, if your brain is giving you ideas like buy the Aussie dollar, because the way that what we call intermarket analysis, the things driving this, while the Aussie might be at the level where it should be finished at, the things driving it haven't finished yet, are just beginning. And it's very early to call the end of the trade war just because you had a talk about trade truce. We're going to see exactly Trump's could get upset. You know, this North Korea, US, Trump sit down may go very badly. In fact, I expect it will go very badly. But, you know, the meeting between Trump and Kim. But let's see how it happens before we try to make our trades, you know, plans around it. And what US wants from China is sort of hard to demand. You know, basically they want China to import more of their goods. I mean, you can't put into law making your country more competitive. It's very hard, right? So you can jump up and down, but there's limits to how much, you know, tariffs. I mean, the reason tariffs don't work is because it just doesn't change the underlying cost of producing in that country or the effectiveness, right? It's just it's not 100% going to bring back things. So this what's going to happen here? Probably they'll work out some sort of deal, I suppose, but it's not over yet. And while the optimism came through on Monday, it lasted one day. Yeah. If you told me yesterday during the Asian session and Tuesday, right? If you told me that, yeah, tonight in the US session, Dow Jones is going to fall 500 or fall 400 points, and I'm like, oh wow, sentiment's so fragile. 600 points to the low. You know, I'd be like, wow, after all that rally, you're going to give it up like that so easily. This is really bad price action. Like, this is really hard to be bullish or buying the dip. And if people stop buying the dip, you know, the stock market is in for a bad time. And that's what I fear the most here. So the Aussie dollar towards 75 is the April sort of suggestion. It's finding the pathway down very easily at the moment. And the way that I would like to introduce you to trading the Aussie dollar is to get out of the US dollar side of things, because the US dollar side of things has a little bit more impact based upon what's happening right now with the stock market. Yeah. So if you were to tell me the stocks went up today 600 points, yeah, I'd say, well, the Aussie went up 50 points. While there's still trade wars in the background, the Aussie dollar is going to do poorly on the regular against the Euro and the Aussie. So what do the charts of the Euro Aussie and the Pound Aussie look like? It looks like we're testing key levels on the Euro Aussie, right? So the Euro Aussie has this has this ability now to, if it breaks this level, which you can sort of put in the same basket as 75 on the Aussie US. And while the longer term out, like why is the Euro Aussie got this uptrend feel? It's not all about trade wars. The market was already going up generally anyway. It's because the pace of the central banks is the ECB is moving first, right? And the RBA is still uncertain. If the RBA changes its tune, or the market starts to change its tune on the RBA, because sometimes the market and the banks put out the predictions that the RBA is about to raise rates, and if everyone forms a consensus, it almost forces the central bank to jump in line with them. But once the rate hike cycle begins in Australia, we haven't had one for years, then the market starts looking at not just one rate hike, but 2, 3, 4. Usually it comes in 3 or 4. And the Europe is coming from a much lower base, coming from nearly 0%. So, you know, the Aussie dollars are already at Aussie interest rates are already at 1.5, and Europe's at 0. You know, they're going to raise more aggressively, quicker. 2019 will be all about the euro. And in the very short term, we know that stock markets going down hurts the Aussie. And we know trade wars definitely hurts the Aussie, because China is, if you hear bad news about China, there's only one currency you can sell, and that's the Australian dollar, because you can't freely sell the yuan. You can't really hit China in the current FX scheme of things. So there's the proxy for China is Australia, because it's our largest trading partner, and sort of Australia is used as a proxy for Asia in general, and, you know, China in particular. So if there's bad PMI data out of China, Australian dollar goes down, right? That's just the way the market's set up, and that's what you should expect to continue. And it's not a global US trade war. It's basically US versus China. That's what's happening. I mean, It's always been that case. Everything else has been bluster. That's why Australia got immunity from the steel. South Korea got immunity. Europe got immunity. Japan got immunity. Brazil got immunity. Mexico and Canada got immunity. So it's who's left? China. And so this is what it's all about. So Aussie dollar is most affected by this. That's another reason why Aussie-Kiwi is so low, right? The main reason why it's so low, because the Kiwi's going down. That's the Aussie chart. The Kiwi chart, though, is still holding up a bit, right? It's not exactly you go to, if you hear some negative news, you don't just go sell Kiwi. You might go sell dollar CAD. You might sell the Canadian dollar, right? That had a rally all the way up towards that 131. And this looks a lot more damaging than the Kiwi. But that's very also, look, in Australia, we don't want to trade Canadian dollar. Canadian dollar is the North American Australian dollar, okay? If you lived in Canada, you would trade the Canadian dollar. If you lived in Australia, if you lived in Asia, in the Asian session, for so many reasons, you're going to trade the Australian dollar. They're very similar. They've got different characteristics. We love copper and iron ore. They love oil. But our RBA announcements are during our time. Our economy is our local economy. China is our big thing. Yeah. In the US, if you're trading dollar CAD and it's in North American, you get all the dollar CAD announcements. You also get the concerns about NAFTA and those things. But it's much easier to be a dollar CAD trader. Yeah, we're sticking to Kiwi and Aussie if you live in Australia. Yeah, dollar CAD is also a little bit more of a crazy currency than Australia and the Kiwi. Well, maybe not the Kiwi, but definitely more than Australian. And it's unnecessary, right? They're very similar currencies. They both do the same thing on the same news most of the time. So just focus on one. And they're actually in the middle of a rate hike cycle. So they're different than Australia. So Aussie dollar is a bit more cleaner just for many reasons right now. There's no central bank noise in the Australian dollar right now. The most neutral central bank in the world right now is the RBA. Yeah, for the foreseeable future, they're on hold. So that makes it easy. Yeah, other things are affecting the Aussie, and it makes it easy for us to sort of know this is good or bad news. And that's what we want, right? We want predictability in trading. So what we should be looking for in general is the selling of the Australian dollar, opportunities to sell the Australian dollar, and only if you're going to be looking for buying opportunities after the trade war is a little bit more mature, after the Aussie itself is tested a few times or broken below 75, after the stock market selling has finished its little run, right? And, basically also what happens in the US dollar index at this level. We want to see what happens in the next couple of days, in the next couple of weeks. But the time for buying is not now. Although it's cheap, it can get a lot cheaper. And that's what you want. And the price action is definitely not for now. I mean, the main thing you want to do when you're trading is follow the trend. Yeah. And I know it's hard as a trader to look at this chart and say, oh, I'm going to keep selling. If you looked at this chart and said, I'm going to sell, yeah, and you did that same trade 6 times or 10 times, 6 times for sure you're going to win. Yeah, the markets doesn't change direction every day. And if you're talking about the day trading, that's where we're trying to make money today. Where's the market most likely to go today? It's most likely to keep on in that trend. Yeah, over the longer term, it can go back up, but it might take a couple of months. So we stick to what's going on today. It's going to be very hard to get into trouble. And even if you do get into trouble, it's also much easier when you're selling rallies to put your stops in better places. Okay, so, if I was selling the Australian dollar at this peak here, selling a little rally, I'd put my stop above here. Right? When you're buying, you got no reference point if you're making new lows. Where do you put your stop? Yeah, it's just so much harder to play the opposite side of the market. Okay, and training your brain not to see things as cheap but weak is probably the most important thing I want you to try and do as a trader. And also forcing yourself to follow the trend, even when you're uncomfortable doing it, is another way that you really start to see, wow, trading's not so hard. Because I know that most of, well, not most, but many of you in the room right now would be looking at trading saying, oh, every time I enter a trade, the market turns around. Or I can't trust the market. I can't go to bed. Right? I can't go to bed in the market. It's going to turn around. It's going to kill me. Right? Well, yeah, you're probably doing counter trend trades, and those counter trend trades are lasting. The market's bouncing 3 or 4 hours into your side. You're in profit. Then if you're turning, you go to bed, and the market resumes trend, and you wake up and you're negative, and you hope to get out of it. But the further you get away from your entry rate, you might have bought an Aussie at 75. The harder it is to see it getting back there. Every time the lows get lower, the highs get lower, you're getting further and further away from your rally, and there's very little reason the market change around right now. So accepting that and putting stops in, and like just trying to change your brain, yeah, that's the most important thing. So if you're looking at this Euro Aussie chart and say, wow, that's too high, too close to resistance, yeah, then if it gets to 1.86 or 1.85, you're going to miss this whole rally. And has it ever been there before? It spent most of its life there, right? So it's not so much that the Euro Aussie is expensive right now. It's that the Euro Aussie was at the extreme valuation when the Aussie was so strong and the Euro was so weak. These are normalizations. All right, this is sort of what the pound. I can't buy the pound. I've missed. The market's too high now. This is the pound normally, right? 144 is still decade lows, multi-decade lows. This is like near all-time lows. This is what we're talking about here. Is this is once in a generation sort of stuff. As the market recovers, you really got to be careful that you don't hatch yourself in based upon what you think the market can and cannot do. And that's something that you can't really get without experience. But I'm just telling you that 1,000 pips on the pound is not hard. Like my view for this year is pound at 150, and euro at 130, and that's conservative. Both of those can easily go another 500 to 1,000 pips above that. When the market starts to move, it can really move, and it loves to trend. We have lived in a pretty almost placid last 2 years in FX, where big moves haven't happened. The last big move in the last few months, anyway, in the last year, has been when the dollar CAD the Canadian government central bank surprised the market by starting its rate hike cycle. Now that was 136 to 123, and it was just relentless. Yeah, you almost got no chance if you bought any of these dips. It went straight through 130. People were asking me, "Oh, we just dropped from 136 down to 130. Can we buy?" I'm like, "Let's see what happens." Went straight through, and then went another 900 pips. So that's 1,600 pips in the space of months. 1, 2, 3, 4, 5 months. I mean, that's pretty extreme. That's like the Aussie hitting 90 cents by the end of the year. Impossible, people would say. Well, yeah, not if they start rate hikes. The market just overshoot. And afterwards, yeah, you do get the stabilization and the market can go in a new direction. But in terms of rate hikes, if someone begins a rate hike cycle, which Europe is about to do in the next 12 months probably, and the pound's mid-cycle, right, the pound's probably going to raise rates in May. This pound is what you should be looking at trying to get long for multiple reasons. A, it's not US and it's not China, right? It's Europe's little brother. It's just had a major crisis. Coming out of it, it's got to deal with Europe. It's probably going to track Europe like a brother now. So both of them are going to go higher and lower together, with a little bit of extra jazz on potentially the pound side, as the pound is likely to raise rates in May, right? So the pound has a nice backdrop. You want to know how to make money. You pick something, a pair which has got a rate hike coming up, and you look to buy that pair. It's got constant, relentless support. And like basically you need to hit this with negative news constantly for it to go lower and remain lower. Every time it goes down, I see it as a buying opportunity. Yeah, especially because they've got the Brexit transition deal, which means the whole Brexit debate gets put off for another 12 months. What's the market going to focus on then? It's going to focus on rate hikes. That'll be the next thing, and the weak US dollar. So which way the pound going to go? Probably higher, right? And you've just seen on the monthly that it's got so much room to move. And so, you know, yeah, we're going to buy the pound. So what are you going to sell? Okay, well, I've been pretty clear on what we're selling, and so what does that leave you with? We're selling the Australian dollar, right? And we've been doing it for weeks. And some of you in the room have been doing it with me for weeks. And it's been remarkably easy to make money. And people are like, oh, wish trading was like this all the time. It can be like this all the time, right? You look for opportunities in a trend to get along on that trend if it's a fundamental trend that can't be changed very quickly. And you have heaps of warning if something's changed. And it has room to move. Yes, it has huge room to move. But what's the Pound-Aussie chart look like? And why do people not like trading Pound-Aussie? Because it moves quickly. And the main thing, the reason it moves quickly is because 1% move at 1.8 is 180 pips. A 1% move for the Aussie dollar is 76 pips. Okay, so it's more than double that. Yeah, so this is why you got to, when you use your stop losses, you need 150 pip stop losses. Oh, that's way too much. Well, no, it's okay. You know, we're going for 400 pips rather than your normal 100 pips, which would be a normal currency. Pound-Aussie moves extremely quickly. This was yesterday, right? This was yesterday, 182.70 on the dip. This is when the pound itself had a bit of a trip. Okay, the pound had a trip last night. Yeah, and at that point, like, you could buy the pound, but say, hey, shit, I'm not sure what the US dollar is doing right now. The US dollar is being super strong here. I might buy the pound as it starts to form a little bit of buying action for the first time in the day, right? A bit of consistent buying action. I might buy Pound-Aussie here. Yeah, and all you need is either the Aussie to keep being weak or the pound to rebound, and you're going to make money. All right, so it's been pretty relentless, and this is since middle of March. It's gone up, and it's sort of like the same trade we talked a lot about last month when we're doing the update. And it does look like it's too high to buy, but keep in mind where we come from and how far high we've been before. That's not even showing much history, actually. All right, it's been above 2 a lot. Yeah, so this is not going back many months. If we go back in time, the Pound-Aussie was above 2 a lot. And so this rally, it's got a lot of room to move. The Aussie may not go much lower than 75, but the pound going to 150, right? And if the Aussie went to 275 in the coming months, then you're looking at the Pound-Aussie at 2.0. Okay, and so that's 1,600 pips still. Right, now, obviously, today it's quite high, and you just don't want to buy in straight today. But what I will do is I'll buy one lot here, and next month when we do this, it might be in 2 weeks, but next month if we do the same sort of update for May, we'll see how the outlook worked out. What we talked about today, whether stocks had downtrends, what happens if that doesn't happen and stocks go back into stocks go from downtrends to uptrends this whole month. How would it affect these trades? Basically, take what we've talked about a lot tonight, and in a month's time, which is a longer time horizon, let's see where these trades end up. Yeah, not the dollar tech one, but we'll leave that just for fun anyway. But the Pound-Aussie itself, because I know it's hard to buy. This is just straight up I'm buying there. Obviously, I can't get stopped out. I've got 27,000, so it's not going to stop me out, which is another reason to be over capitalized. When you're trading on MT4, you don't need stop losses 100% all the time, like the web. So that helps a little if you just want to buy and set and forget. Ideally, if you're not in this trade, though, right, to do a little bit of analysis, a pullback towards 183. Yeah. would be a little bit more risk reward wise. So there will be pullbacks in this. Yeah, it might just overcook right now. Might go straight to 187, and then if it pulls back to say 184, regardless of what we're looking at, as long as nothing's fundamentally changed in the big picture, so there's not a trade accord between China and the US, right? As long as something not big like that, and stocks have rallied 1,000 points in 2 days sort of scenario, in that game, Aussie dollar is going to do quite well, and in the short term. But you could use that opportunity on any big pullbacks to get long this, because it's the pound recovery. It's just a way of expressing the pound recovery, and it's probably going to be a theme for the rest of the year. And the target is 2. Okay, the target is 2.0, and we'll see how many of these updates over the next year it takes to get to 2. All right, or how much trouble we can get in one trade. All right. But, okay, if we're going to put a big stop loss, might as well put a big. Okay, let's see if we can get stopped out. 1.75. Okay, that's the trade. That's the long-term trade. Now, if you're not in the market, and that might be a big trade for you in terms of size, we're looking for pullbacks to get into this same trade. And you can see there's been multiple pullbacks in the past. This is mainly on pound news, not the Aussie strength. A few of these are Aussie strengths, but we're looking at just the pound Aussie as the main trade, the core trade for the year. You can use also pound as well. If it looks like the US dollar's broken 88, you can jump across and buy some pound. Pound's going to do quite well in that environment. Or if you like the whole euro to 130 trade, it's going to be much more gentle, and you're not going to make as many pips, but it's a bit more reliable, and it's a bit cleaner, right? Because if stocks fall, pound might go down, but if stocks fall at the moment, euro is not going down. So it might be a cleaner way of playing any volatility in the stock market. So euro to 130 makes a lot of sense as well. And any dip in the euro, you can be a little bit more confident that it's not going to go too much lower. So back towards, sub 120 would be a huge surprise to this market, which is sometimes why things happen. But positioning in the euro was really stretched here. Yeah, the market had sort of overbought a little too quickly. In the last couple of months, it's settled down a bit positioning wise. And so sometimes all you need is time for the market to consolidate, for it to continue. And that's what we might be able to see soon if we break that 125. All right, guys. Look, that's about all we've got time for. If you want me to look at particular pairs now, or if you want any questions, please ask a question there. I'll be able to look at some charts for you. But yeah, this is, if you're not a Easymarkets dealing room client, this is sort of the stuff we talk about. Yeah, and we try to make money doing this, and I've been doing this a long time, and it's my biggest love in this game, in my job, is to help traders win for the first time, their first 500 pip trade, say, right? Because many traders have never done that, and it's it's a little bit of a change in the way you view the market, and also letting a winner run. So that's something I can talk to you guys about, but I know most of you don't call me now sometimes because you say I'm going to tell you to buy the pound Aussie. And you're like, shut up, Tony. Missed that too much. We missed it. It's not over yet. We'll see. And look, if you want to, if you see big moves in any of the pairs we talked about, and you want to get an update quickly, or has the game changed, I don't mind you guys calling as well. If you've been to this, even if you're not a member, a dealing room client, even if I don't mind you at all calling just to say, hey, what's changed? Because no one has a crystal ball in the game, and things that can change, and they do change all the time. And otherwise, we would all be millionaires. But how we react to that change is very important. Okay. So look, I'll be back next month for this as well. But I want to speak to most of you, if possible, throughout the month. See if I can help you with your trading as well. Don't be shy about asking questions if you want one. Hey, Peter, how you going, mate? GJ. You want to die? You want to play GJ? All right. Yeah, two of you are asking about GJ now. Okay. Okay. So obviously, given that I like to buy dollar yen and I'm passionate about the pound going higher, then I'm looking for opportunities for the pound yen to go up. Unfortunately, the pound yen biggest indicator of movement is the dollar yen. And whilst this is still broadly in an uptrend, the view that the stock market is going to have a problem and have a hard time in the coming up months until we clean out a little, get a little bit lower, and if we get a clear understanding of how US and China trade balance is going to be worked out, it's very hard to have a conviction on this pair. The pound itself is quite strong, yeah, so that's one thing helping it go up. The yen, dollar yen, though, is in almost this relentless downtrend. And if we can get some good price action on dollar yen, anytime I want to buy dollar yen, right? Anytime like yesterday, or Monday, sorry, when the stock market turned. So dollar yen on Monday was, we opened the day still under 105. And some of you might get the research that I sent out. And if you're looking at, sort of key little, what am I looking at as a trader? A break above 105 and a holding above 105 and sort of a movement above it. It's almost like if 105 was the Aussie-Kiwi and I started to see this price action underneath 105. Tested it back above it, came here, got some really good news. There's peace. Stocks are starting to go relentlessly higher and it's getting dragged up. It's almost like no one wants to buy it. And then it has a little crack. Okay. Now, dollar yen is much more constructive right today, but the fact that the stock market didn't hold its rally means that it's unlikely that the dollar yen's going to hold its rally, so it's very hard to get excited about it. But on this particular day, when I was looking at buying dollar yen after it came, back below 105 and came back up, that same day I was buying pound yen, right? So this is Monday night. Yeah, we're talking about now. The pound yen on Monday night did quite well as well, and this is pound yen, right? So when it finally kicked dollar yen, this is the sort of price action you saw. You saw a huge 200-point rally. The thing about it, though, is if you go to sleep and you forget about it, come Tuesday night, you had this huge reversal. Yeah. And it's disheartening a little, and I don't think we can consistently buy it. There's too much cross pool on it. But yeah, if you get a good inclination that you're going to buy dollar yen, then forget whatever pair you're going to buy pound against, just jump straight to pound yen. It's very unlikely that pound will be going lower at a reasonable pace. Even if it's strong US data that's causing dollar yen to go up, pound yen will go up as well. Yeah, so I'm at the moment, I'm buying pound yen only when I'm buying dollar yen. I'm not buying dollar yen yet. Yeah, and well, if I'm doing it, it's tactical, and I've got no sort of hopes that we're going to the 170, 180 like I was hoping for back in the day, right? Before the crashes happened, it was easy to sort of look at those longer term charts and say, where were we? Where are we coming from? Where can we get to? Yeah. Now that stock markets are under pressure, the yen's so strong, we've got a much more medium term view. Now, if dollar yen gets down to say 100 as well, I mean, maybe pound yen will be back towards say 145, 140, and that would, you could say, well, long term we can still buy this, right? Yeah, probably, but it's it's not where what I want to go into long term. And you're here for short term trades. So short term trades, yeah, when risk turns on, we can buy it. In the short term, if you put a gun to my head, I'm looking to sell it, like right today. Yeah. Because dollar yen I can see rolling over here, and the pound's a little fragile just in the short term after last night's little shake. So yeah, look, longer term looking to buy dips when whenever I'm buying dollar yen, I'm buying pound yen, but yeah, it's hard. And I wouldn't encourage you guys to trade pound yen. It's not easy. I mean, it's easy when the yen's trending nicely. I mean, it's basically been in a downtrend, a nice selling. This was really good selling. You can't make any more pips than you can. Only Pound-Aussie rivals the pound yen, but you got to keep an eye on it. And some of these intraday ranges of 300 or 400 pips. Yeah, so it's really hard to know if it's safe to enter on the pullback. This is the part which makes trading pound yen hard. The way to trade it is to not buy dips and sell rallies. You intraday, like you go in when the market starts moving. Yeah, and you just go with the market in the European session, and you just hope that it goes another 200 pips and doesn't flip around. So you don't wait, right? You don't wait to 149 to buy. Yeah, that's not how you trade pound yen. You hop on and you trade with it as it's going, as it's picking in a direction, and it's moving. And the more you don't think about buying it, right, or selling it in this particular case, the lower you see it go, and then it can go that 100 pips in an hour. So for traders who are day trading, yeah, it's very nice in that regards. Like you can make your pips and go to bed. But it's not, if you can do that already, then you don't need me to tell you about pound yen, right? If you're already at the stage where you can hop on a trade mid, just in the middle of nowhere, going with it, right? Then you've got that ability to sort of pull the trigger, as we call it in the game, and it's that's what you need to trade pound yen. So it's not for beginners, and it's dangerous. Yeah, like sizing your trades and putting your stops at proper places. A lot of the time when I'm trading very much. I'm at the computer and I'm trading pound yen, and I'm closing manually, both profit wise and I'm not saying stopped out. I'm closing my losses manually. It's that sort of pair. You almost have to trade the vibe of it, the feel, and it's yeah. Don't think anyone can predict it that much either. So run with it. It's a breakout. It's great for breakout trading, but it's also great for just your trading in the European session with the new, whatever the market feel is today. Yeah. David Locker. Oh, I haven't seen a month-end flow report so far, but how month-end flow reports work is it's based upon which indice outperforms. Okay, and so I will send out a report. My name, this is my email. If you guys aren't on my email list, I always send out a month-end flow report from a bank. What, did I send my private email? Shit. So it's, did I send TonyD at Easymarkets? Yeah, I'll send out the month-end flow report. I'm not sure actually on the back of it who which indice has been the worst hit. Probably it won't be like it was last month, which was very US dollar positive. We'll have a look. I'll get one probably to. Well, I'll see if I have one now. Just 1 second. So I'm part of a bank chat room. And stuff like I sent this morning, like this. It's like just a little, how do we play the trade war stuff? Good infographics, but also month-end flows. I'm sure there'll be one tomorrow. There isn't one right now I can see. I'll send it out to you guys. But yeah, month-end flows is it's based upon big funds, all right, and big index funds rebalancing their portfolios. And so apart from that, there's €1 pound flow that's pretty predictable. And you can sometimes see it. But these days, with all the oversight in banks, it's sort of like the rumor mill has died a little. So it's not like you're going to get told anymore. You're not going to see huge moves as everyone sort of hops on certain trades. But yeah, this is what's happening right now in the market. You don't get the same impact anymore from month-end flows. I haven't used it to trade for a couple of years now. I think the level of information the banks give is not there as well. But yeah, look, if it's ultra one way, basically if one currency has moved a lot, or if one indice has moved a lot compared to another, then it can help. And that's only for a day or two. And they now spread it over the last week if there's big order to be done. Matthew Bailey, gold breaking 1370. Looks pretty good yesterday. So Friday, right? Looks pretty good yesterday too when it rallied in the back of stock market going up. But it's almost like gold has got a delay function on it. So we'll quickly look at gold. We'll finish up on gold. Although it's another thing like pound yen, I would encourage you guys to trade. It kills more traders than anything else. So this is gold when the trade wars are beginning and they're talking about them. And I'm like, why is he down here? What's happening here? And this was the day that the Fed raised rates. And that particular day, we just went straight up, right? This is a 4 hour. This is last week. So week before last. Last week, sorry. What am I talking about? Week before last. Thursday, 2 weeks ago. So this price action here is on that day. I actually thought we were going to break 1300 just for stops because the market has, it was going down when it should be going up. Stocks were going down. It was no longer reacting to the stock market. But it seems like it was just delayed. So this reaction to the weakness in the US dollar post Fed rate hike, and the trade war beginning was made sense. What didn't make sense was Monday's price action where it went up, even with the trade war, being called off for a day or two. But what's happened since is stocks have gone down a little bit, but gold's also going down. Right? It's almost 2 days behind the events. Right. So in this particular environment, the 1360 level, I think, is a little out of reach. So 1360, for all those who don't trade gold, has been holding now for 5 years, right? If you assume that didn't break it. So that's inside the month, it's gone up and come back down. Inside the month, gone up and come back down. So this level has gained importance, and yeah, if we do break and hold above it, it's probably going to be run to 1400, 1450. And definitely if the gold starts acting as another safe haven where people flood to it. So yeah, look, if we get above 1360 and hold above 1360, I don't think you want to treat it as 1370, but basically if you see gold ever at 1380, yeah, then the buy on that trade towards 1400 to 1450 is pretty clear. Like if you're looking at a longer term view, I would be much happier if it's happening because people are getting, if gold starts reacting to the stock market properly again, because right now, whether the gold's going to go up or down on the day is very hard to guess. Yeah, because gold's falling when stocks are falling right now. Yeah. So the only thing which is indicating which way gold's going on an hourly time frame is the US dollar index. So it's almost gone back to being neutral, like having nothing but US dollar strength or weakness guiding it. So if the dollar index is going up, then gold's going down. Yeah, that's the only thing moving gold seemingly, right now. If it starts to get its safe haven status back, and we have trade wars or we have stock market selling in the next few months, then yeah, gold to 1450 makes a lot of sense. But while it doesn't respond to stock markets too much and to headlines, global tensions do nothing for it as well. Like you see huge headlines come out, it doesn't help or hurt. So yeah, look, we'll see. But yeah, it's no longer that safe haven anymore. So it's just another US dollar proxy. more than anything else, and that's not that easy. Like, why would you trade that when you could trade something like the euro? Yeah, but yeah, probably is going higher, even with the euro, right? If it doesn't go back to being a safe haven, it just goes back to being US dollar weakness. The view for the US dollar is it's going to break 88, and the euro is going to break 125.50 as we get closer to the end of the year anyway. So gold's got a pretty easy pathway currently to 1450. So yeah, that's the way I play it. All right, guys, that's enough for today. We'll be back next month. You can see me most days as well, just for little updates on the .com.au Easymarkets website, and I'll give little updates on certain pairs that are moving. All right, guys.